This is Capital Market live on Channels Television. Welcome back from the break. Now, let's quickly take a look at the African markets. Commodity price movement is now dictating the movement of share prices in most emerging and frontier markets across Africa. If you take a look at the numbers, we've got EGX30, which is the Egyptian Stock Exchange, closing in the negative direction this week, having had a fair performance yesterday, Friday. But the NSE Kenya, which is the NSE All Share Index of the Kenyan markets, came in positive on Friday. Positive as well for this week. That's one of the few markets doing well at this time because of the less reliance on commodities. But in terms of the Johannesburg Stock Exchange in South Africa, that market is doing a negative status of 0.22% in terms of week-to-date performance, although Ghana also closed uptick fairly. Other markets are depending on the commodity prices to shape their bearing for this week and beyond. Now, this week, the federal government reconstituted the National Council on Privatisation after 2 years since the assumption of power. The council had handled the privatization and reformation of 142 public enterprises since inception, and the NCP is chaired by the Office of the Vice President with oversight function on the activities of the Bureau for Public Enterprise, as well as granting of approvals to privatization transactions. But the absence of the council in the last 2 years had prevented scheduled privatization transactions, as other agencies of government had taken over such responsibilities in recent time. Let's get back to Chukuma Ayawu, head of research at GTI Securities, to tell us what he thinks about this council and how we can, draw a parallel between this development from the federal government, from the fiscal authorities, and the Nigerian capital markets.
For me, it's a welcomed renewed interest from the government. I think it's important
policy-wise, right?
Yes, for policy-wise. I think it's important for cost-cutting measures. If the government is ever going to bring down our recurrent expenditure composition, then this is a good way to go, because it will mean that government has more leeway to be able to focus on areas where it really has impact on the people, and it creates, of course, it deepens business penetration in the country. It draws in renewed interest from foreign direct investors, and that has an overall feel-good effect. So for me, I think it's positive.
So let's look at the activities. We said earlier that they've done 142 deals over the years. But of all of the privatization that we've seen in years past, we haven't seen much of them being listed in the Nigerian capital markets. Anything, do you think this is making a case for such listings, especially, for example, the telcos? Take a look at what is happening to Etisalat at the moment. Yes, they have foreign investors. Major investors are listed in the Abu Dhabi Stock Exchange, but here in Nigeria we don't even have any of these telecom companies listed in the Nigerian capital market, and we know that Etisalat has been doing really, really bad in terms of earnings for some years now. If such a company had been listed, perhaps we wouldn't have seen this much brouhaha around that company at the moment. So do you see this privatization council making a way for the listing of entities that have been privatized, government entities that have now been privatized, and especially these telecom companies in the Nigerian capital markets?
Well, there absolutely has to be some form of relevance of listing on the exchange for these companies to come in and list. If for a business strategy position, if the company doesn't think that it's getting the kind of depth it wants from the market by listing, right, then of course it won't access the market. So this speaks to the fact that the NSE needs to be a bit more proactive with making sure that there are product offerings out there for people to get interested enough in coming into the market, and that has an overall effect of deepening our markets, which is positive. But like you pointed out, I think it is something that these telcos should actually be looking at. For instance, there could have been other capital market-based products that would have allowed this company be able to raise its FX loans at considerable rates or at maybe a bond that would have been more lenient on its performance, and the pressure of repayment that the short-term banks have wouldn't have been there, because it would have been probably for a longer period. So yes, it's a strategy that at some point these companies need to start focusing on. If they haven't been paying attention to what this is doing to bottom line for them, I think the Etisalat case is a clear example of why other funding methods, options should be considered, and of course the capital market is the way to go.
Okay, so let's take a look at another aspect of the markets that we had that actually shapes decision in the market this week. This week saw the outgoing Director General of the Debt Management Office, Dr. Abraham Nwankwo, honored at the Nigerian Stock Exchange, for his distinctive roles in the fixed income market. He has occupied that seat for over 10 years, and it's time for him to go. So he was actually honored at the Nigerian Stock Exchange. In fact, let's play back something that he really said regarding his exit from the markets.
From the Debt Management Office, after 10 years, I want to use this opportunity to emphasize that the modest achievements we've made are due to the sweat and blood of the management and staff for the Debt Management Office, two of whom are with me here this morning or this afternoon. In the DMO, we always have an understanding that is not expecting too much for us to give our blood, our skin, our flesh to the nation, if that helps build it.
Okay, Chooks, talk to us about what you make of his leadership in the last 10 years. I don't know where you were when the man joined the system.
Well, I think I was already getting closer to coming into the market, but he has been a very capital market friendly, if I may say, DMO director in general. I think he has tried very hard to be able to bring in a lot of products that sort of feeds the essence of the capital market, long-term funding through fixed income alternatives to equities. So I think we've had some convergence between, because ordinarily they are competing asset classes, equities and fixed income. But he has been able to some extent, make it viable for people to consider having both of them. And because of, for instance, the FGN savings bond, it being tradable on the secondary market is something that would give investors, a lot of investors, an opportunity to be able to play the fixed income market efficiently, because it gives you an opportunity to exit whenever you need to, which is something that most fixed income instruments sort of most people get discouraged for doing fixed income.
All right, Chukwuma, always a privilege to have you on Capital Markets. Thank you very much for coming through. We appreciate it. Chukwuma is the head of research at GTI Securities. In the week ahead, we see international breweries coming to the Nigerian Stock Exchange Wednesday, the 28th of this month, shortly after, that's immediately after the Salah holidays, coming to close the market, in relation to the mergers and acquisition program that company is looking at. Thank you very much. That's all the time we've got on the program this weekend. Thanks for watching. Thanks for being a part of it. I'm Temple Achaji, and I'll see you next time.